Good day, guys. Welcome, by the way. So now, if you are new to this channel and you've not subscribed, please click on the subscribe button. You can like and share. Let's take a quick look at our analysis on this S&P 500 for the week. By the way, so I wanted to actually stay to the end because we would be analyzing from the monthly time frame down to the 1 hour time frame. We'll actually tell you how to take the trade and why we will be taking such trades. Now, this S&P 500 on the monthly time frame, this is actually a move, right? We can see here. I think this. Let's see. If this is a chart that has been showing us, 2011, 2011. Before 2011, I think it was around 2009. Our S&P have actually been going bullish, but currently this price is showing us here is 2011. So we've actually been going bullish on this S&P 500. Price has not given us that bearish move throughout that time. It was until the late 2021. So about late 2021, this is about December, by the way, as you can see, December 2021. So we see this bearish move. So it was then we started having multiple breakout structure down. So once we add an impulse move, we add a correction bearish, we add the correction, then we add a bearish impulse move downward, then we add another correction, and this is it. This is an impulse move, which was bearish. There was a correction here. We add another impulse move, right? So this was a correction here on the monthly time frame. See this green, and guess what? We are now on an impulse move downward again. So basically, our S&P 500 is now bearish, right away. Monthly time frame. If you want to trade it on the monthly time frame aspect of it, we are actually to look to go bearish. And the thing is that majority of the stocks in this S&P 500 are actually dropping. They're actually bearish, due to the fact of inflation, and to actually curb this inflation, interest rates will be increased. We all know the effect of interest rates when it's been increased. It will be more difficult to actually borrow, more expensive to actually pay back. You have to pay more when you actually borrow. So I mean, most of this company, they're actually running on loans. They borrow to actually run this company. So I mean, when interest rate is now kind of increased, when they hike it will be difficult. Though there won't be much borrowing to actually run that company. And we know if there's no much money to run a such company, then such company shares tends to fall. So basically, once these stocks start falling, then our S&P 500 will drop. Basically, most of all these majority stocks, by the way, once interest rate is high, it tends to affect them. So I mean, that is why stocks are falling. So our S&P 500 will definitely going to fall. So basically, first of all, this was the previous lower lows here. Our price got to this area, this level here, then we add a pullback, right? So we are seeing we add a pullback to this level, and now we are having a drop. So basically, we would want to take that drop to at least take out this level. Let's see if we can drop to a level of 3655.3. So S&P 500, we are aiming to actually drop to about a level of 3655. So S&P 500, we are still aiming to go bearish. Monthly time frame. Let's see what 10-period moving average says. We see it here. 10-period moving average says we are bearish. So basically, if you have to take this trade, you have to actually go bearish on the monthly time frame. Down to the weekly time frame, by the way. So when you zoom it out, this is actually a bearish move. Take a look at it. This was an impulse move. We add a correction. There was an impulse move here. So we add a correction again. Guess what again? We are now on a bearish move, impulse move downward. So at least we would want to take out these lows, our previous lows, where we saw this impulse move up from. We saw this level here where our price actually pushed up from. So we would want to see that drop to take out this our previous lows. That should be how many percentage? We have about 5% drop to go. So we still have about 5%. I mean, that is still a whole lot. You can grab a lot. It depends on how many you want to trade, quantities you want to trade. If the broker will allow you to trade it, if you can buy it. It just depends on how you are looking at the market, or if you want to trade it. But by the way, we would want to see the drop, tap to our previous lows, then our previous lows break below and continue to go bearish. We all can see this one. Let's take a look at this. there was a bearish move here, then a impulse move, a correction was made, then a bearish move which came to that previous lower lows and it broke below it. Now we've gone down, we've had a correction again, and we are expecting our price to come to our previous lower lows. So once it gets to our previous lower lows, then we'll be expecting to break below and continue to go bearish. So basically, weekly time frame also says bearish. So monthly time frame says we should go bearish, we should short this. Weekly time frame says bearish. Now let's see what daily time frame also says. Now let's actually start this daily time frame. We'll start it off recent analysis. So I don't want to go back, so it won't take much of our time. Now starting from here, by the way, what we cannot see here is actually a bearish move. You can see S&P 500, it is actually dropping, right? See this impulse move here. A correction was made. We had another impulse move here. So another one, a correction was made. Guess what we are expecting next again? Another impulse move on this S&P 500. So basically, we've just broken below this previous lower lows on the daily time frame. This was the previous lower lows on the daily time frame where we had this pullback area, and now price has dropped and it has actually broken below it. So we still want to still go bearish again. First of all, let's take out these lows, a lows of about 3752. After it, we want to take out this previous lower lows, which is on the weekly time frame. This is the lower lows, the lowest point price has actually gotten to this year. This is the level below. So first of all, take this level out. Once it takes it, then we can actually aim to take this or second level on the daily time frame. That is it we are aiming for. Daily time frame also says we should go bearish and we should actually look to enter bearish. Now to actually enter this trade, we would have to roll down to the 4-hour time frame. 4-hour time frame is time frame to actually look for to enter this trade. So basically we can see on this 4-hour time frame bearish move. Now let's see it on this recent move. Of this recent move, we are actually bearish. See it this way. We will start it from here. First of all, price is below the 10-period moving average, and we all can see this is a bearish move. Impulse move was made here. We had a correction, another impulse move. So this 4-hour time frame is giving us like a correction. So once the correction is over on the 4-hour time frame, then you can enter this trade, because we see once we're having this correction the first time, the correction came to tap our 10-period moving average, it got to it, even broke above it a little bit, then we saw a drop. So now we're having a correction. We can aim to see our correction tap our 10-period moving average or even break above it a little bit, then we would consider to short it. The reason is that this is a level here where our price reacted from before. We saw level this area here, then we saw a pullback. Now price has broken below it. We're very much likely to see a pullback to that same level, which means the price will tap the 10-period moving average, even break above it a little bit, then a drop will occur. So 4-hour time frame, we are still on a pullback. So wait for the pullback to is over, then you can actually place the trade. And lastly, the same thing with our 4-hour time frame. For 1-hour time frame is still giving us like a pullback move. Once the pullback is over, then you can actually short this. So above all, for monthly time frame downward, we're actually aiming to short this. But 4-hour time frame and 1-hour time frame is still on a pullback. Once the pullback is over, then we can actually short this S&P 500.